What I am about to tell you is the most important shift in global finance since Nixon took America off the gold standard in 1971. Right now, gold is trading above $5,200 per ounce. Silver is at $86. The dollar index has fallen to a nearly 4-year low. But here is what they are not telling you on mainstream financial news. In 2024, Saudi Arabia terminated the petrodollar deal that had been in place since 1974. Saudi Arabia will now sell oil in multiple currencies, including the Chinese RMB, euros, yen, and yuan, instead of exclusively in US dollars. For 50 years, that deal kept the American dollar dominant. It forced every nation on earth to hold dollars just to buy oil. It allowed America to print money and export inflation to the world. And now it is over. The non-renewal of the petrodollar agreement is likely to weaken the US dollar's dominance as the world's reserve currency. About 60% of global foreign exchange reserves are currently held in dollars. However, a shift away from dollar-based oil sales could decrease international demand for the currency. If you own gold or silver, you need to understand what just happened. If you are holding dollars, you need to understand why the next few years could change everything. The deal that kept America dominant is broken, and by the end of this video, you will understand exactly what happens next. Welcome to AG Profit Hub. This is where we cut through the noise and expose what is really happening in precious metals markets, while everyone else feeds you the official narrative. Subscribe right now and hit that notification bell because this is the kind of analysis that mainstream media refuses to connect for you. If you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see the truth. And trust me, what I am about to reveal changes everything you think you know about the dollar and your wealth. Let me explain exactly what the 1974 deal was because most people do not understand this. And that misunderstanding is going to cost them. The long-standing petrodollar agreement, signed between Saudi Arabia and the US on June 8, 1974, ensured that oil sales were exclusively denominated in dollars, securing political and military support, while solidifying its economic influence. Here is how the deal worked. Saudi Arabia agreed to price its oil exports exclusively in US dollars, ensuring a steady global demand for the currency. Saudi Arabia invested its surplus oil revenues in U.S. Treasury bonds and securities, recycling petrodollars back into the U.S. economy. In exchange, the United States provided military aid and protection to Saudi Arabia. This was not just about oil. This was about creating artificial demand for dollars worldwide. Think about it. Every country that needs oil, which is every country, had to first acquire dollars. This created constant, massive demand for the U.S. currency. It allowed America to run enormous deficits. It allowed the Federal Reserve to print money without immediate consequences. The Commission was formed shortly after the 1973 OPEC oil embargo in order to strengthen economic ties between the two countries. A more secretive arrangement emerged later in 1974, where Saudi Arabia agreed to invest heavily in U.S. treasuries in exchange for military support. For 50 years, this system worked. America printed money. The world absorbed it. Oil stayed priced in dollars. And anyone who challenged this system faced serious consequences. But now, after 50 years, Saudi Arabia has made a different choice. Now let me show you what Saudi Arabia is actually doing because this goes far beyond just ending one agreement. In 2024, Saudi Arabia terminated this deal to diversify its economy and partnerships, including trade with China and its BRICS membership, signaling a shift. China and Saudi Arabia recently signed a $7 billion currency swap agreement, allowing direct settlement between the yuan and the Saudi riyal. This enables bilateral trade to be conducted without using the US dollar as an intermediary currency. Bilateral trade between China and Saudi Arabia has surged in recent years. Since 2013, China has been the largest market for Saudi oil, last year accounting for 21.7% of the country's oil exports. And there are reports of something even more significant developing. Recent unverified
Saudi
reports have drawn
Arabia
attention to the possibility of an
agreed to
international
price its
vault being
oil
established in
exports
Saudi Arabia.
exclusively
According to
in
the claims,
US
such a vault would
dollars.
enable oil exporters to convert
This
yuan from energy
ensures a
sales into physical
steady
gold
global
directly through
demand
the
for
Shanghai
the
Gold
currency.
Exchange. Oil for gold,
Saudi
not oil for dollars.
Arabia
Oil for
invested
gold.
its
That is what is
surplus
potentially
oil
being built right now.
revenues in US
As of January
Treasury bonds and
2025,
securities.
several countries are using the petro-yuan,
This
including Russia,
recycled
Iran, Venezuela,
petrodollars
Saudi Arabia,
back into
China,
the
UAE,
US
and Egypt.
economy.
And Saudi Arabia is not
In
acting alone. The BRICS
exchange,
countries list has actually
the
grown from
United
5 founding
States
members
provided
to 11 full
military
members,
aid and
with Saudi Arabia
protection
officially
to
joining in July
Saudi
2025.
Arabia.
With the addition of Iran, the
This
UAE, and potentially
was
Saudi
not
Arabia,
just
the
about
BRICS group could
oil.
control nearly half of oil
This
production
was
worldwide
about
and account for an
creating
estimated 35% of total oil
artificial
consumption,
demand for
according to an
dollars
analysis by S&P
worldwide.
Global. Nearly half the
Think
world's
about
oil
it.
production, under a group actively
Every
seeking
country
alternatives to
that
the dollar.
needs oil,
Now let me show you what
which
BRICS is
is
building, because this is the
every
replacement system
country,
that is already
had to
operational.
first
The most compelling structural
acquire
development in
dollars.
de-dollarization was the
This
launch of the BRICS
created
gold-backed unit currency
constant,
pilot program on October
massive
31st,
demand for
2025.
the US
This instrument is pegged to
currency.
1 gram of gold and backed
It
by a
allowed
40-60 mix of
America
physical
to
gold
run
and BRICS national
enormous
currencies,
deficits.
representing a direct
It
challenge to the
allowed
dollar's
the
role as the
Federal
primary reserve
Reserve
currency.
to print money
32.
without
As of December
immediate
2025, the BRICS
consequences.
alliance controlled approximately 50% of global gold
Commission
production,
was formed
providing critical
shortly
mass to
after
establish
the
independent pricing platforms
1973
and settlement
OPEC
systems.
oil
The
embargo
BRICS Pay decentralized
in order
payment
to
system is being built
strengthen
transaction by
economic
transaction,
ties between
creating
the two
infrastructure for dollar-free
countries.
trade. 50% of global
A
gold
more
production,
secretive
a gold-backed settlement
arrangement
currency,
emerged later
payment infrastructure
in
that bypasses SWIFT
1974.
entirely. Efforts toward de-dollarization have been a focal point for BRICS
Arabia
nations.
agreed
In October
to
2024,
invest
during the
heavily
BRICS
in
summit in
US
Kazan,
treasuries
members discussed the development of BRICS
in
Pay, a
exchange
decentralized
for
payment messaging
military
system
support
aimed at facilitating transactions in local currencies.
for
This
50
initiative seeks to reduce
years.
dependence on the
This
US dollar in
system
international trade,
worked.
and the central banks know exactly what is happening.
America
In tandem
printed
with these
money.
efforts, central banks worldwide
The
have been increasing their
world
gold reserves as a
absorbed
hedge
it.
against dollar exposure. In 2024,
Oil
central
stayed
banks
priced
collectively
in
added
dollars.
1,045 metric
Anyone
tons to
who
global gold
challenged
reserves,
this
marking the
system
third
faced
consecutive year that annual
serious
purchases exceeded 1,000
consequences.
metric tons.
But
Notably,
now,
the National Bank of
after
Poland led with an
50
addition of 90
years,
tons.
Saudi
This surge in gold
Arabia
accumulation
has made
aligns
a
with BRICS'
different
strategy
choice.
to diversify reserves and reduce reliance
Now
on the US
let
dollar.
me show
3
you what
consecutive years
Saudi
above
Arabia's
1,000 tons.
actually
That is not
doing,
diversification.
because this
That is
goes
preparation for a
far
new monetary
beyond
system.
just ending
Now let me
one
show you what is already
agreement.
happening to the dollar, because the effects
In
are visible right now.
2024,
In January
Saudi
2026,
Arabia
the US dollar
terminated
index
this
continued its
deal
downward
to
trend from
diversify
2025,
its
officially
economy
breaking below
and
the key
partnerships,
97.0 level and reaching a low of
including trade
95.5,
with China
marking a near
and its
4-year low
BRICS
since February
membership,
2022.
signaling
This
a
movement not
shift.
only shattered market expectations for a temporary
China
stabilization
and
of the greenback,
Saudi
but also triggered a
Arabia
chain reaction across
recently
global
signed
financial
a
markets.
$7 billion
The US dollar wrapped up
currency
2025 with its
swap
worst performance since
agreement.
2017 and is expected to
This
keep that
allows
bearish trend
direct
going into early
settlement
2026.
between the yuan
The pressure is
and
coming from the
Saudi
Fed's rate cuts
real.
and geopolitical
This
uncertainties,
enables
shifting the global trade
bilateral
map.
trade to be
And it is not just the
conducted
exchange
without
rate.
using
In a sign of
the
de-dollarization in
US
bond
dollar
markets,
as an
the share of foreign
intermediary
ownership in the US
currency.
Treasury market has been declining over the last
Bilateral
15 years.
trade between China
De-dollarization
and
is
Saudi
unfolding in central
Arabia
bank
has
FX reserves,
surged
where the
in
share of
recent
USD has slid
years.
to a 2-decade low.
Since
35 Gold's share of global
2013,
foreign reserves has
China
also
has
risen from
been the
around 13%
largest
in
market
2017
for Saudi
to roughly
oil.
30% as of late 2025.
Two,
From 13%
last
to 30%.
year, it accounted for
Gold is replacing the dollar in central bank reserves.
21.7%
De-dollarization
of the
is most
country's
visible in
oil
commodity
exports.
markets, where the greenback's influence on pricing has
Right.
diminished.
And there are
Today,
reports
a large
of
and growing
something
proportion of energy
even
is being
more
priced in non-dollar
significant
denominated contracts,
developing to
said Natasha
evade.
Kaneva, head of global commodities strategy at JP Morgan. JP Morgan's head of commodities is telling you directly, energy is being priced outside of dollars, and it is accelerating. In January 2026, global capital saw a net outflow of $18 billion from the U.S. Treasury market and $22 billion from the U.S. stock market. Significant capital shifted to the Eurozone and emerging markets where interest rates are relatively higher, further intensifying downward pressure on the dollar, $40 billion flowing out in 1 month. The world is moving. Now let me connect this to what central banks are doing, because this is the critical insight. In response, central banks have moved into gold in a way to diminish sanction risks. They can take physical possession of the gold they have bought and keep it in domestic vaults. Instead of leaving it at Western financial institutions such as the U.S. Federal Reserve, the Swiss National Bank, or the Bank for International Settlements, where gold is subject to Western jurisdiction, they are protecting themselves from what happened to Russia. When the West froze $300 billion of Russian reserves overnight in 2022, every central bank on the planet received the same message. If the likelihood of geopolitical confrontation heightens, it follows that the declining trend in the share of the USD in global reserves will persist. This is consistent with the de-dollarization trend, whereby a growing number of countries have developed ways to settle their cross-border trade and investment transactions in local currencies. Doing so chips away at the USD's dominant role in the international payment system. For BRICS nations, gold serves as a bulwark against financial turbulence and a tool to facilitate trade outside Western-led financial infrastructure. And here is what the analysts are projecting. In a note on Sunday, JP Morgan analysts said they expected gold to reach $6,300 an ounce, a 30% gain from current prices by the end of 2026. As major banks project gold reaching $5,000 to $6,000 and silver potentially hitting $100 in 2026, understanding the forces driving this market has never been more important. $6,300 gold by year-end, $100 silver. These are not fringe predictions. These are major bank forecasts. The reality is that the dollar has declined significantly this year. That has been a big boost to gold. We think that it's inevitable that currencies weaken when the world is fractured in terms of trade policy and relations. One of the easiest ways to respond to a trade war is to devalue your currency, making your exports more competitive. It's fair to say the U.S. is playing that game. Even though they're talking a big game about the dollar, I think they've let the dollar slide. That is Sprott's CEO telling you the quiet part out loud. The U.S. is letting the dollar slide. Now let me tell you what this means for you, because understanding the situation is useless if you do not know how to act on it. Mayra Rodriguez Valladares, managing principal at MRV Associates and former foreign exchange analyst at the Federal Reserve Bank of New York, says total de-dollarization would potentially be devastating for investors who aren't prepared. American investors, and frankly global ones, would be tremendously hurt if central banks and markets started to pull away from the dollar. The best thing that investors can do is monitor if indeed there is a movement toward de-dollarization and to diversify investments into different currencies. A former Federal Reserve analyst is telling you to diversify away from the dollar. That is extraordinary. Silver ETFs can help investors hedge against monetary debasement and capitalize on industrial tailwinds. The 2025 rally represents a structural revaluation rather than a speculative bubble. The confluence of a weakening dollar, Federal Reserve easing, escalating geopolitical flashpoints, and the transition toward a multipolar monetary order has created a unique environment for precious metals. If you are holding gold and silver, you are positioned exactly where the world's central banks want to be. They are buying gold at record levels because they see what is coming. In a world where almost every financial activity incorporates credit risk, that of a state, a central bank, an intermediary, gold remains the only asset without a counterpart. Gold has no counterparty. It cannot be frozen. It cannot be sanctioned. It cannot be printed into oblivion. That is why central banks want it. That is why you should want it too. Let me leave you with this. The expiration of the Petrodollar agreement represents a fundamental shift in global economic and financial dynamics. The U.S. dollar's weakening, the potential rise of alternative reserve currencies, and the increased use of digital currencies could all contribute to a more complex and multipolar world. This transition may lead to higher borrowing costs for the U.S., increased volatility in oil markets, and significant changes in global trade patterns. The 1974 deal is over. Saudi Arabia is selling oil in yuan. A $7 billion currency swap bypasses the dollar. BRICS has launched a gold-backed settlement currency. Central banks added over 1,000 tons of gold for 3 consecutive years. The dollar hit a 4-year low. $40 billion flowed out of U.S. assets in January alone. Saudi Arabia's exit from the Petrodollar agreement marks a significant shift in international trade relations. This is not speculation. This is documented policy. This is measurable flows. This is the end of an era. A concerted move by BRICS nations to reduce reliance on the U.S. dollar in international trade could diminish the dollar's global dominance. This shift might lead to decreased demand for dollars, potentially resulting in a weaker currency. The question is not whether the dollar's dominance is ending. The question is how fast and how you position yourself. Gold at $5,200. Silver at $86. JP Morgan projecting $6,300 gold by year-end. The central banks know what is coming. The institutions know what is coming. Do you? Drop a comment telling me whether you think the petrodollar system can survive or if this shift is permanent. I read every single comment. Subscribe if you have not already. Hit that notification bell because this story is accelerating and you do not want to miss what comes next. Saudi Arabia just broke the 1974 deal that kept America dominant. Now you understand what happens next. This is AG Profit Hub because the real story is never on the surface. I will see you in the next one.